How's it going, you beautiful people? I hope you're having an absolutely fantastic day. Today's topic is on GE, otherwise known as General Electric. It's a company that's been around for well over 100 years, and I'd like to talk a little bit about today because it was in the news. So I'm going to get into a couple articles, and I'm going to give you guys my take on GE. It's not going to be a full stock analysis or anything like that. I'm going to kind of give you guys my take. So let's get into it. So GE is kind of making news because they say they will be cash flow negative. So let me read this article. GE shares tumble as CEO Culp says cash flow will be negative in 2019. Power unit to struggle more. General Electric CEO Larry Culp said at a J.P. Morgan conference on Tuesday that the company's industrial free cash flow in 2019 will be negative. GE shares closed down 4.7% at $9.89 after Culp's comment. The CEO was speaking with J.P. Morgan analyst Stephen Tusa at the firm's Aviation, Transportation, and Industrials Conference in New York City. Free cash flow is a financial term defined as money left over after a company pays for operating expenses, and capital spending is often used as a gauge of efficiency. GE's industrial free cash flow is a key measure watched by investors. GE generated $4.5 billion in industrial free cash flow last year. Culp is working on turning around GE's fortunes as he focuses on improving the company's cash generation as well as cutting costs. If we're going from $4.5 billion in 2018 to what I'm framing as negative territory in 2019, it's really a combination of operational pressure, power, renewables, and then the non-operational pressures that I'm calling policy, Culp said. Tusa is widely followed on Wall Street for his work covering GE. Ahead of his meeting with Culp, the J.P. Morgan analyst warned investors that GE's prized aviation financing and leasing business is already in liquidation mode and has weakening earnings that are masked by gains. You've got a commitment from me and the senior team to continue to improve our disclosure, full stop, Culp told Tusa. We highlight restructuring in a host of different ways, but what I'd like to have it be is more consistent. Culp also believes GE's battery power business will struggle even more this year than last year. As he said, the company expects an even greater level of negative free cash in the division. As we work through these issues, he said, GE Power will continue to face challenge for a couple of years more. We know Power is in a turnaround mode, and that's not going to be a quick turnaround by any stretch, Culp said. It's going to be a few years before we can call the end of that. Tusa asked Culp about the company's issues with its line of gas-fired power turbines called H-class turbines. We had an oxidization issue that created cracking. We've upgraded about 23 of the 33 turbines in their operation, Culp said. Tusa both began and ended the conversation with Culp by talking about his admiration for the CEO. People ask me all the time if you hate me or not. Anything you want to say on that, Tusa asked? As I've told my daughter, we're friends, Culp said. So that's the first article on it that went over how GE Power is struggling. It's been struggling for a long time. That's really no secret. If you looked into GE, you should know that. It's funny that they say this at the J.P. Morgan conference because if you didn't know, J.P. Morgan is actually a founding member of GE. I found this out a few weeks ago and I was actually pleasantly shocked. I did not know that. A couple other things is Stephen Tusa. If you don't know Stephen Tusa, he's considered a really good analyst, especially on GE. A lot of people respect his opinion because he made a massive call. When the stock was in the $30 range, he said it would go down under $10 and around, I believe, the $6 mark to be exact. He was pretty correct on that, and the stock, that's like a huge move. That's 80% off of its highs, and that happened. So GE hit their lows in December or just before Christmas of 2018. Since then, the stock has rallied about 47%. It's down a little bit today, so about 40%, but still a huge rally like this year alone. So that's absolutely massive. In just about 3 months, the stock rallied over 40%. That's a pretty big move. GE's been a company in the news a lot. They also recently sold a part of their division. I'm going to read this article to you now. This happened last week, but I'm going to read this to you and then it'll go into something else. So last week, GE soars on deal to sell biopharma unit for $21 billion. So General Electric is selling its biopharma business to Danaher Corp for $21.4 billion as the industrial giant continues to shed pieces of itself. GE shares gained 7.3% in early trading after announcing the agreement The biopharma unit part of GE Life Sciences generated revenue of about $3 billion last year. The mostly cash transition is expected to close in the fourth quarter of this year. GE is considerably smaller now than it was before, becoming entangled in the financial crisis a decade ago and wants to divest even more of its business. Shares of GE jumped 11% before the opening bell Monday. So GE did this massive sell. They sold it for $21.4 billion to Danier. This was the day Warren Buffett was on CNBC. He talked about it and he liked it. I mean, I like it too. They kind of need to do this, and I looked into GE a little bit more. The reason they need to do this is because of their pension fund, actually. So let me get into this next article. What General Electric's annual report says about where it stands on 3 crucial issues. General Electric released its 2018 annual report after the close on trading on Tuesday. This is last week on February 26th. GE remains a controversial stock on Wall Street. Analyst targets range from a lowly $6 per share to a lofty $21 per share. So the annual report is sure to be scrutinized by a host of Wall Street analysts and investors. Here are some early observations Barron's has after scanning the 317-page document. Insurance. Investors have been hungry for more details about long-term care insurance since GE took a $6.2 billion after-tax charge in 2017 for losses arising from old policies the company retained after it spun off Genworth Financial. GE disclosed that the annual review led to a small change, but nothing like what happened in 2017. No new bad news is certainly good news as it relates to long-term care policies. GE disclosed 274,000 legacy insurance policies in force covering 342,000 lives. In total, insurance liability is $35.6 billion, support by $34.6 billion in investment securities and mortgage loans. Pensions. GE's pension funding status improved by about $7 billion, with the total underfunding now at $27.2 billion. It looks like its ERISA-based pension plans won't require mandatory cash contributions in 2019 or 2020. Power. The decline in GE's power business has hurt cash flow. GE disclosed that the overall market for annual heavy-duty gas orders will be between 25 and 30 gigawatts for 2019 and the foreseeable future. That's a reduction from the 35 gigawatts hoped for in 2018. GE's annual filings also included CEO Larry Culp's first letter to GE shareholders. Among other things, Culp outlined his commitment to improve the balance sheet and fix the power business. No change there. GE stock is up 47% year-to-date from its December low of $6.40 per share. Basically, GE has a huge pension in that last one, and that's pretty much why they sold their biopharma unit for $21.4 billion, is to help pay down that pension. GE's been having some serious cash problems for the past few years, and their business has obviously struggled a lot. If you look at their stock chart, it's absolutely horrendous. The stock is down huge. Okay, so any investor in GE would have been crushed. Remember, this is a company that was a top 10 company at one point. Kind of crazy. Anyways, there's a lot to talk about this company. I'm not going to get all into it right now, but there's a lot of issues with this company, and there are some silver linings with this company. I was a bear for a long time on this company. I never liked it, but I'm starting to turn around and I might want to initiate a position. I would not buy the stock over 10 right now, and with the stock under 10, actually it's starting to look more attractive again. The 640 low seems like that's pretty much as low as it's going to go. I don't think the stock will really go lower. It looks like that Larry Culp is doing a pretty good job, and I think he will turn things around. However, I think you have to wait for Stephen Tusa on this one. I normally am not a big fan of analysts, but in this case, Stephen Tusa really called this move perfectly, and a lot of people are going by what he says right now. So until he upgrades the stock, in my opinion, Stephen Tusa had upgraded the stock to neutral in December and has a price rating of $6 on it. He's one of the lowest, and some are obviously, as in the article said, as high as $21. So on this case, Stephen Tusa's word is probably going to be what really moves this stock forward. Really though, if you get the stock around $6, $7, $8, $9, $10 up to, I don't think you can go too wrong with this company. I would not make this company a big position, just because in my opinion, it's now a speculative company in a way, as it's a show me situation. You have to see what they got, and you're gonna have to wait. You can't just jump into a company like this because it has a lot of issues right now. The company is struggling, and it's going to continue to struggle, and it's going to be negative cash flow for 2019. There's probably better places to put your money. However, if you want to do a small position in GE, and if it does turn around, I mean, at a $9 stock, the stock will more than likely double in the next few years if they can get their stuff together, okay, which is a great return on your money. However, I wouldn't bank on that because this company does have a lot of problems, and it's hard to judge their cash flow and future output, and you don't know if they're going to continue to sell off a lot of their businesses, so you don't know what they're going to be left with. Power is a big issue for them, and I mean, their healthcare unit's still doing pretty well. They make like MRI machines and other stuff like that. That's still a really good business for them. They have their hands in a lot of cookie jars, and some of them are doing well, and some of them aren't, so they're going to have to rearrange their business, and the stock and company might look very different in a year or two. So it's really hard to say with this company. I don't like too much uncertainty in a company. I like to know what I'm putting my money into, so I would not suggest a big position. I would say don't really go over 5-10% of your portfolio on this stock. And that's pretty much it. GE is an interesting company. I think I might dive in depth into it soon. I've been looking into the stock a lot more the past few months just because I'm interested in myself. Such a fall from grace, and it's interesting. It's an interesting story. It's one of the more interesting stocks in the stock market right now, and I really like the story, and I'd like to see if GE turns around. Who knows? Maybe Warren Buffett will buy it. I doubt it personally, but you never know. The Oracle of Omaha might decide to take GE under his Berkshire Hathaway umbrella. You never know. Maybe he will. Who knows? Anyways, guys, I hope you enjoyed this video. If you did enjoy this video and you found any information, found me entertaining at all, or, just anything you want to help support me, go ahead and please smash that like button and subscribe button. Super appreciate it. I would appreciate it from the very deep bottom of my heart. It would mean the absolute world to me, guys. Seriously. Also, comment down below, give me your thoughts and theories. Are you a GE bull? Are you a bear? Do you own the stock? Do you short the stock? Do you have options? Anything? Let me know. What do you think about the stock? I'd really like to know what everyone's opinion on GE is, because I think a lot of people are either going to be on both sides. Some are really going to love it, and some are really going to hate it. I don't know if there's going to be that many in between. But stock is probably going to get a cult following with the people who believe in it, and probably a lot of hate from the people who don't. So anyways, guys, hope you enjoyed the video. Have an absolutely fantastic, amazing, beautiful, one-of-a-kind day. And until next time, see you later and take care.